Hey everyone, welcome back to POA for you. It's Leroy again, and today we're going to go through 2018 O Levels Paper 2 Question 1. Paper 2 Question 1 is a super important question. Carries 20 marks and it will be tested. Alright, so let's get right into it. If you know of a friend who could benefit from this video, please share it with your friend too. Alright, let's go. Now, there are three important steps for approaching paper 2 question 1, and these steps must be followed religiously. You got to practice, and make sure you get this step ingrained in you, and the answers will be delivered seamlessly. Let's look at what these steps are. So first step, whether these items in the trial balance is an item A or item B. And what's an item A or B? Item A would always refer to the statement of financial performance or the income statement, and item B would refer to the statement of financial position or the balance sheet. Alright, so these kind of questions will always start with the trial balance and additional information. So let's focus on the trial balance first as step 1. You are supposed to list down whether these are item A or B. So item A would be revenues and expenses and income. So these are statement of financial performance. Item B would be asset, liability, equity item. So let's go. Equipment, item B, because it's an asset. All these are asset, and accumulated depreciation is a contra asset. So all these are item B. Inventory is a current asset, item B. Sales and sales returns and cost of sales, these are revenues and expense. And these are all what you see above the gross profit line, which I'll show you in a bit. 10% bank loan repayable. This is a liability. Alright, this is not the interest that we are talking about. The next line, which is the interest expense, is item A, because that goes into the statement of financial performance as an expense. And trade receivables, current asset, this is a current liability. Trade payables, allowance for impairment for trade receivables, this is an item B that goes under the trade receivables line as a contra trade receivable item. Cash at bank is an item B. Now you should note that this is a credit balance, which is a short-term borrowing and not an asset. It's a current liability. Rent is an item A because it's an expense, and these two are item B because they are equity item. So voila, first step done, quick. Now let's go to second step. Second step, you're supposed to look at all these additional information and figure out what the journal entries are. So let's look at this. For the first item, wages, salaries were accrued of this amount, which means that they're still owing and you need to accrue for it. And in the current new syllabus 7087, this would mean that you would debit wages and salaries and credit wages and salaries payable. But of course, if you are still being examined under the 7175 syllabus, then it will be accrued wages and salaries. So anyway, this is double entry because if you still owe wages and salaries 1350 above and beyond what you've recorded in the trial balance at 86,950, then you will have to recognize a liability, which is a payable of 1350. The other entry will go into wages and salary expense, which would increase this wages and salary expense from 86,950 to an amount that is 1,350 higher. Okay, so that's the rationale for this journal entry. Now the next one, rent 600 was prepaid. So if you have a prepaid rent, then you need to recognize a prepaid rent account, which is an asset account. So I've debited prepaid rent, and if it's an asset account, then it's debit in nature. That's why we debit it, and you credit rent account. And when you credit rent account, you are essentially saying that this amount in the trial balance of 31,000 is not all entirely for this year, this financial period. You're going to bring it down by $6,000 to reflect that actually only 25,000 relates to this financial period, and 6,000 you have transferred it to the prepaid rent account because you paid it in advance. Right? That's the rationale for it. Now, equipment 10% using straight line method. Depreciation is a standard journal entries. Whether it's a straight line or reducing balance, it's always debit depreciation and credit accumulated depreciation. So for this case is the same thing, debit depreciation and credit accumulated depreciation. How do I get this amount? I took 10% times 10% multiplied by 27500, which is the cost of the equipment here. And because this is straight line, and that's the formula for straight line, the percentage multiplied by the cost of the asset above. Now, in some questions, they may give you an additional information before the depreciation calculation to increase or decrease the cost of the asset. Right, so if that's the case, you have to take not the amount that is listed here, but the amount that is corrected after the adjustment has been done. Don't know what I'm talking about? Go look at 2020 paper 2 question 1. That question has what that question is structured the way I've just described it. So it's a bit tricky there, right? Go take a look at it. Now, the next number 3, adjustment number 3 is the same journal entry as adjustment number 2, but different ways of calculating. It's because it's reducing balance. So the reducing balance is 25% multiplied by the net book value of the asset. And what's net book value? It's cost less depreciation. So I've got 48,000 minus 21,000 here, and 48,000 is here, the cost, and 21,000 is the accumulated depreciation. So that's how I got the net book value, and therefore the amount to be charged to depreciation, right? Number 4, allowance for impairment of trade receivables for the end of the year should be 650. Now, this one you just have to look at it to say, okay, what is the target number that they are trying to adjust impairment for trade receivables, allowance for impairment on trade receivables to? So in this case, it's 650. How much have we already got? So we've got 850. So do we have to bring it up or down? We have to bring it down in this case. And allowance for impairment of trade receivables is a contra trade receivables account, so it's a credit in nature. So if you want to bring something down that is credit in nature, you have to debit that account. So first step is I got to debit the allowance for impairment on trade receivables. I've used an abbreviation here, and I'm debiting it by the difference of 200. So 850 minus 650, I want to bring it down by 200. And then what do I credit? Which I would have to always credit, or the other side of the entry, in this case credit, would always be to impairment loss on trade receivables. And that's $200 as well. Now, if you notice that this is a credit to impairment loss on trade receivables, so when you move it to the statement of financial performance, you got to put a bracket. This is not an expense. When it's a credit, it's actually it's an opposite of an expense, in this case an income, so to speak. But it still drops into the expense section, and therefore we put a bracket, and later I'll show you that as well. Okay. Now, the 5th one is trade repayment of $5,000 on the bank loan is to be made within the next 12 months, right? Because it's June 2019, your year end is June 2018. So when it's next 12 months, that means this bank loan that is repayable in 2025, not all of it is long-term liabilities. Some of it is actually current liabilities because you have to pay it within the next 12 months. So I'm going to put a note here to say that $5,000 of the loan is current liabilities, and I will take note of that in the next steps. Now, interest on 10% of bank loan had not been fully paid in full. So let's look at this. The trial balance tells us that interest paid on a 10% bank loan is 2,625. You know that the bank loan is 35,000, so 10% of that is actually 3,500. So you have underpaid this, right? So what should you do? You need to recognize a payable, interest payable, because this is, you should be paying 35,000, 10% of 35,000, which is 3,500, and then minus 2,625 of what you've already paid. So you still have to pay $8,875, and you have to then increase the interest expense by $875 versus what has been reflected in the trial balance now of 2,625 to show what actually is the amount of interest expense that you incurred in the year. Now, the last one, dividends of 0.5 cents or $0.5 has been declared and will be paid 1 month after the year end. So this is a current liability, and you need to calculate how much is this dividend. So it's 0.05 per share. How many shares are there? 300,000 shares. So you would debit to retained earnings, because in this dividends would reduce your retained earnings, and credit your dividend payable, which is a liability that you will pay 1 month after your financial period ends. So that's it, step 2. This this is important, and to get to know this, you have to know your journal entries very well. I have a video on journal entries and the fundamentals of POA as well. Go check out under my playlist POA concepts. All right, so let's move on to the third step. The third step, you got to update this trial balance number and also mark in the JE section what are new JEs to kind of reflect that in the statement of financial performance and position. So let me show you what I'm referring to. So you have to look at step 2, each of these items. So for example, the first item, debit wages and salaries. How does this affect the numbers in the trial balance? So this is the wages and salaries line. And I would say that, you know, it will affect it by this amount. I have to take 86,950 plus 1350 because wages and salaries is an expense, it's debit in nature. So anything debited here should be added to this 1350. All right, so the new number that I need to bring to my trial balance is 88,300. I'm going to cross this one out so that I don't make a mistake by bringing the old number. Okay, then wages and salaries payables. This is a new account, right? So it's not in the trial balance. So I've indicated here B, which means that this will go to my statement of financial position or the balance sheet in the syllabus 7175 terminologies. Okay, so I need to take note of that. Now, prepaid rent also is a current asset. I have put here B, so it's a new item that I have to bring to the statement of financial position. Rent, 31,000 now would be 31,000 minus 6,000, which would be 25,000. I will cross this out as well. Okay, next, depreciation. This is an expense and it's not in the trial balance. So I'm going to bring it to the statement of financial performance. I'm going to mark A here. And then the accumulated depreciation, which I have it here. The old number is 55,000 and now it is plus 27,500 is 82,000. So I'm going to cross this out. And then the next one is same for motor vehicle. I'm going to bring this depreciation expense to the statement of financial performance as A, and accumulated depreciation here I'm going to mark it down and plus this 6,750, and this is the new number. Okay, next, allowance for impairment on trade receivables. I'm going to look for this account. It's here. And I'm going to take this as 850 minus 200. Okay, and the new number should be 650. I'm going to take this and cross it out. All right, and then this other number I'm going to bring it to the statement of financial performance as I'm going to mark A, as I mark A here. Okay, 5,000 loan is current liability, so I'm going to put a note here as 5,000 is current liability and 30,000 is long-term liability. I'm going to take this and I'm going to cross it out. Cross it out properly. Cross it out. Okay. Then the next part is interest expense is 875. So I'm going to adjust the interest here. I'm going to adjust it. I'm going to add 875 here, and so its final number is 35,000, which is 10% of the bank loan total value. And I'm going to add this interest payable as a statement of financial position item. Retained earnings, I'm going to put this here. I'm going to less retained earnings here already, so I'm going to take this out, right? And then I will know that there will be a dividend payable here as well, and this is a new item. I've marked here B. Okay, so that's it for step 1, 2, and 3. The next part is using these 3 steps to develop our statement of financial performance and position, and it will be seamless. I'm going to show you right now. Okay, so I'm going to take a standard format for the statement of financial performance. I'm going to paste it there. And in this case, it's just sales revenues, less cost of sales, gross profit. There are no other income here, so it's just this section, this standard section, and less your expenses. So I'm going to start transporting all the part A's here, right? Because this is a statement of financial performance. It's part A. I'm going to take all the part A's there. So firstly, I'm going to take these sales revenues and sales, these 3 items across sales revenues, sales returns, and cost of sales, and I'm going to plug it in here. So sales revenues and sales returns, and then that will give me my net sales revenues accordingly, and that formula is sales revenues minus sales returns. Then there's less cost of sales, which is 149, and then I'll get my gross profits, which is essentially net sales revenues less cost of sales. This is gross profit actually means the profits derived directly from the sale of whatever this business was selling. So it could be books, it could be cars, it could be anything, right? Then you start to read less other expenses. So other expenses that are indirect, like wages and salaries, rent and stuff like that. That is not the product cost itself. So we go one by one. So the first one is interest expense. And then less interest expense here, and I've put the workings here. 10% times 35,000, which is 3,500. That's how we got our new number. And the next item here is rent. Okay, so I'm going to mark rent off, and it's important for you to mark it off so that you know that you don't have to worry about it anymore. And then so rent is 25,000, and that's because I have an adjustment in the additional information here. Then I put my workings here. I just have to transport these workings into the rent description here. Then wages and salaries, I'm going to move it across. I'm going to mark it across, and then I'm going to put here wages and salaries, the same thing. I put here 86,000, which is the original number, plus 1,350, which I have as a working here, and I've transported the working into this line here. Then the last one in this list of A is general expense. I'm going to mark it out, and then I'm going to mark it here as GE. Now, is that it? No, I have to look at additional information part 2 to see whether there's any other A's here. And I've got a few A's here, right? So the first one is depreciation equipment. So I'm going to mark it also depreciation equipment. And I'm going to include, I don't have space in this area, so I put that workings 10% times the cost of 275,000 here at the side, and you should just indicate your workings in the examination too. The next part is the depreciation for motor vehicles. I'm going to mark it, and then I'm going to put here the reducing method balance workings. All right, so I'm going to look for any more A's here. Yes, I got one more A here, impairment loss. And notice that this is a credit, not a debit. Expenses are debit in nature and income is credit. So since this is a credit, I'm going to put this as a negative. Okay, so this is a negative, and this is 8. It should be 650 minus 850. Okay, then I would have all the expenses here, and my total expenses, net expenses, is 178,650. My profit or loss for the year is actually the gross profit less the total expenses, which lands me at 26,050. And this will be moved to B, which is my statement of financial performance under my retained earnings section. And I'll show that to you right now. Okay, so I have right here the statement of financial position format, and this is a standard format that you can see from your syllabus outline. And the syllabus outline, please go Google your syllabus outline, and you should see in around page 43, 44 all the formats of your statement of financial position and performance. Okay, so I've lifted that from there. And let's start with non-current assets. Always non-current assets first. So I take the first item, I mark it out, and then I would, of course, move the equipment that cost here 275. Accumulated depreciation, I would mark that out as well. That's 82,000. And how did I get 82,000? I lifted this new number. Okay, and then the next and then net book value is just the cost less depreciation. Now, motor vehicles equipment, try and do it yourself and see what you get. Pause the video. Now I'm going to show you the answer right now. I have 48,000 as the cost, and the accumulated depreciation is the new number of 27,750 that I have at the side here. So all these are done. This is done as well. Okay. So if you see at the end of it, everything should be yellow and nothing should be white, and you should, in your examination, of course, just cross it out with a different color pen or same color pen, up to you, whatever works for you. Current assets, I'm going to look through the B items. So inventory is the first item I see. So I'm going to bring it over. Let me mark this away first. Then I'm going to show the inventory number of 32,300, and then the next item is in my current assets. Of course, I'm going to take trade receivables, and trade receivables, I'm going to mark this as done. I'm going to bring it across, and after trade receivables is always the allowance for impairment on trade receivables. So I brought the allowance for impairment of trade receivables here, 650, and I need to mark it as done. It should be this item. There's a bit of a misalignment here, but this B would refer to allowance for impairment of trade receivables. So I brought it down here. Any other current assets I have in this list? So no more current assets that I have in this list. Just gonna move this down a bit. Okay, now I'm going to look for the additional information for any B's that I can bring over to current assets. Yes, I see one prepaid rent, so I'm going to move prepaid rent here, and I'm going to bring it 6,000 here. Any other current assets that I have to bring? No more current assets, the rest are current liabilities. So that's it. My current asset balance is total this number, right? And then my total assets will be the all my non-current asset plus my current asset, which is 281,100. Okay, next up, the other side of the statement of financial position. So it always starts with shareholders' equity for a private limited for a limited company. So issued share capital, you bring it across. Right, and this is what you have. Your statement should always say share capital 300,000 ordinary share. OS is ordinary share. Not sure where to find this. You look at your syllabus outline, share capital XX number of ordinary shares. Okay, then we go back to here. You have then your retained earnings. Now retained earnings, what I've done is I've taken the retained earnings. RE is retained earnings, but you should write it in full. Yeah, 40,625, and then I less 15,000, which is the workings here, which kind of takes into account the dividend payment, and plus 26,050. What is this 26,050? Anyone could guess? Okay, it is the profits for the year. So I'm going to mark this as done as well because I transferred it to part B. Okay, so retained earnings movement is always beginning retained earnings, add profits for the year, less dividends, right? That's issued for the year. So that's your final amount, and this is the total. Okay, now non-current assets, I know I have something here, so I'm going to mark retained earnings as well. Non-current assets, I'm going to mark it as done, and then this is 35,000, but 35,000 I've already indicated in the notes here that 30,000 relates to long-term, so 35,000 relates to current liabilities. Okay, which then I can put the current liabilities here as well, 5,000. Okay, so that's done. Now I look down the list, trade payables, I'm going to mark this as done. So I'm going to bring trade payables across into the statement of financial position, and then cash at bank. Cash at bank is a credit balance, and that's why it's a liability. If it's a debit balance, it's something that you own. If it's a credit balance, it's something that you owe. Okay, so I'm going to mark this as transferred, and I'm going to transfer this right now. Okay, and I'm going to transfer it as a short-term borrowing. Now, so all the trial balance items have been marked yellow, so I've transferred it either to part A or part B of the question. Now I'm going to look for the additional information, journal entries. I've got some items that are part B that are not transferred yet, so I'm going to do it right now. First, short-term wages and salaries payables. So I'm going to transfer that, and then the next part is interest payables, so that's something that I'm going to transfer as well, and I'm going to mark this as done. And the last part is dividend payable that we calculated earlier. I'm going to transfer it, so it's done. Now, so you would know that all these items have been marked yellow, these items have been marked yellow, so there should be no items missing, and now you add up everything. So these three items, your shareholders equity, non-current assets, non-current liabilities and current liabilities add up together is 281,102. So these the statement of financial position balances. So you are most likely in a good place right now. So hopefully this has been helpful for you guys. If there's any questions, please feel free to write to me on this channel or email me directly at poa4you@gmail.com. I'll be so happy to help. Hopefully this has been helpful for you, and take care for now. All the best. Practice, practice, practice. Remember, try and get it below 40 minutes. Okay? Take care.